Well, we're off and running in our futures trade here on the Ag Commodities on a Monday. I'm Marlon Bowling with you. We're going to welcome a little extra help here momentarily. Let's see how we are starting out here. Let's go to the corn board first and see what the prices are doing. So as we look at the corn on live prices from Chicago, we have that March contract currently trading just one tick higher, 1/4 cent higher at 3.59 3/4. That is just one tick off of its high of the early morning trade here, but boy, a very narrow range anyway. May up 1/4 cent as well. On the soybean trade, looking at that, how we're kicking off, we have the January down 1.25 at 10.36 1/4. The March down 1.50 at 10.47 even per bushel. Now that is about 11.5 cents off of its overnight high. So that could be interesting. We'll find out about that in a second. And looking now at our wheat trade here in Chicago, we have the March wheat trading 3 3/4 lower at 412.5. Kansas City March is down 3 3/4 also at 409 3/4. The Minneapolis trade has been kind of independent here lately. It is down 1.50 lower at 534 3/4. So let's go to the phones and bring in Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. And Dewey, thank you for joining us here today as we look at the markets in the early going. Kind of a softer tone here in the wheat trade, maybe a little bit so in the soybean trade. I see where we turned around quite a bit from our overnight highs in the soybeans. What's behind that? Any idea?
Yeah, I think there's a couple of things behind it here, Marlon. One is that even though the USDA wimped out on the domestic numbers Friday, but not making any changes, they did up their world estimate on soybeans to about 89.5 million tons, which is a record. If you look at, say, for instance, the U.S. stocks to usage at a little over 11%, that's the highest it's been in 9 years. Global stocks to usage are the 5th largest on record. You got your funds are long. So, I mean, it's really hard to try to find any bullish numbers in the report that came out on Friday. They're just simply not there, and you've got the funds, both the trend-following funds and we've got the index funds are holding some pretty healthy numbers.
The crude oil market has been sharply higher overnight and early this morning. We can take a look over there, Dewey, and right now on the West Texas Intermediate crude, my goodness, January up $2.33 this morning at 53.83 per barrel. Is that what is providing a little bit of the support under that corn market relative to the soybeans and the wheat?
It may be offering it a little bit. I don't think really the grains are looking too much at what's going on here in the crude oil. Of course, the reason the crude oil is up, we've got some non-OPEC members have mentioned or have decided that they will cut back on their production. But, you know, anything on these oil-producing countries, when you look at any agreement, it's usually just good for the day only. Tomorrow's another day.
And it should be noted also that we had a sale of soybeans overnight and a sale of grain sorghum overnight. Soybeans, we had 256,600 tons of soybeans sold to China overnight for the current marketing year. Grain sorghum, we sold 100,000 tons to China also for the current marketing year, and we needed that because the grain sorghum sales have been running way behind, that's for sure. Dewey, if you don't mind, I'd like to pause for a little break, and we'll talk about what's going on in the livestock markets when we come back. Our guest is Dewey Strickler. We'll have more with Dewey right after this. Well, we're back with you here on the Market Day Report. I'm Marlon Bowling. On the phone, we have Dewey Strickler of AgWatch Market Advisors. Wanted to look at the cotton market prices here this morning. As we kick things off, a little firmer tone. Right now, March cotton is up 57 points at 71.37 cents per pound. And that's interesting, Dewey, because we had some cotton numbers that came out from USDA last Friday in that supply and demand report, and it seemed like 2 of the 3 major numbers they issued were not all necessarily that friendly to the trade.
Well, you got your dollar down here this morning, so I think that's giving them just a little bit of a lift.
So that is providing a little bit in the way of currency exchange benefits. Also, the dollar that you were talking about right now, it is still sharply lower. Let's take a look at what the last trade is here on the U.S. dollar index. March futures down 500 points right now at 101.030, so definitely something to keep an eye on. Do you think we have reached our peak in the dollar for a little while or not?
No, I think longer term we're going to be working up the dollar into about the 103, 104, possibly the 105 range, and then I look for a very sharp drop in the dollar. Reasons, I don't really know why. It could be any number of things because we have several bubbles in these financial markets.
Okay, let's take a look at our live cattle trade, and we'll see how the futures markets are opening up here on the livestock side of the equation. So as we go to the live cattle board, right now we have that February contract trading $1.63 higher. Nice start here to the day for producers this morning. We have February at 112.15 per hundredweight, so we're much, much closer to the highs of the opening ranges than we are the lows. The low was 110.12, so we're over $2 already off of our early low right after the open. The April contract now up $1.47 in value at 111.72. Now this is a market that closed a little bit weaker on Friday, just a few pennies. Now on the other hand, on the feeder cattle trade, we were about 60 lower or so last Friday when we went home for the weekend. Well, it's a nice rebound this morning on the futures trade. Feeders are now showing January up $1.43 at 127.38. That's on the high of the morning trade. March now up $1.42 this morning at 123.92. Also a brand new high as we look at it, and that is basically about $2 off of its low of the day. So are you surprised at the strength that you're seeing here in the cattle market early on?
Not really. I mean, when you look, the cattle production is expected to be revised lower in about in 2017, and technically the market looks pretty solid here. We've had a peak here, let's see, I guess it's about a week ago at 112, and had a break on the February contract about 108.17. That looks like a corrective type pullback. So that said, I would look for the cattle to maybe try to work up in the 115, maybe close to 116 before we see a real topping action.
So triple-digit gains on the nearby cattle complex futures. Let's look at lean hogs, see how they're starting out today. And on the lean hog board, we have February currently just a dime higher at 61.65. April now 17 higher at 66.12. So not a lot going on. Just real quickly, do you think the weather is going to have an impact here on the livestock trade this week or not?
I don't think it's going to have a great deal of impact here. You got to remember most of the hogs now are produced inside now, and of course the cattle. Well, I mean, we're going to be looking at some cooler temperatures, but I don't think anything is going to really, cause any significant decline in weights.
Thanks, Dewey. I appreciate it. Good to visit with you again. Dewey Strickler of Ag Watch Market Advisors in Franklin, Kentucky, with a look at our livestock trade. So cattle getting off to a surprisingly good start today.
Day is young, but it's a new week, so we'll have to see where we head.
Yeah, catching a few people off guard. So we'll watch it.
Thank you so much, Markets Editor Marlon Bowling.